Commercial real estate is seeing a shift. Inventory, U.S. inventory is becoming an issue, and mortgage rates need to be at 5%. Along with that, we're doing inventory snapshot, Mountain View Home, Apple Home of the Week, and let's get going. All right, there's a shift happening in U.S. housing markets that just look at inventory. If you look at this, inventory is starting to rise quite a bit. As a matter of fact, you look at New Mexico, Washington, Georgia, Florida, those are some issues over there. Why? Because people moved out there and they realized I don't like being here. I want to go back to what I know, and I want to feel better going back to where I came from. So people are moving back up to New York and back to California, back to wherever they came from. California insurance is crazy expensive. Housing is expensive. So in different places outside of the Bay Area, inventory is starting to grow. You're starting to see that, especially in the Central Valley, on the coast down here, and in Florida. People are paying an average of $10,000 a year just for the privilege of owning a house for insurance. And that's kind of like throwing money away unless a hurricane happens. So while we're seeing inventory increase across the nation, specific areas are not as affected, like our Bay Area. Our Bay Area inventory is still hugely underwhelming. I mean, we're at 50% of where we need to be as far as single family homes in San Jose as well as Santa Clara County. So this could be one of the house of cards, or one of the cards stacked in the deck to bring down the economy. If the economy goes down, then yeah, prices will go down. In the Bay Area, inventory investors will come and take that up, because the Silicon Valley, the Bay Area, always bounces back, right? I talk about this a lot. I thought I'd show this as a graphic so you can revisit this. Maybe I need some more coffee. But our housing here, I don't think it's going to be the tipping point. Talk about automotive industry. I talk about the health industry and credit cards being overwhelmingly top heavy right now. Commercial real estate right now is a place where I am really concerned. I keep seeing this, and maybe it's just the algorithm keeps pointing it towards me because I focused on it. But if you look, commercial, the last couple of days I've been showing you videos about big, huge, multi-million, hundreds of millions of dollars being foreclosed on in commercial real estate. It's dangerous, it's precarious, and it's because these banks are over leveraged and they can't service these loans. And the minute there's a whiff, that asset, that investment is seeing any kind of trouble, they're going to pull the foreclosure trigger on it. And that could be part of where we're going with the economy. Talk about unemployment, talk about this. I just saw something where stocks are starting to tumble a little bit. That's all normal stuff, right? That's not anything to worry about until it becomes something to worry about. This is something to worry about. I would do a lot more reading if I were you to understand what's going on here. Could this trigger an economic crisis? This could be the tipping point. This could be the reason why our house of cards falter. That's what's important to understand, is that we all are intermingled with this. It's not just one myopic view of the real estate market, right? We have multiple different things that are coming in. We don't talk about the unemployment because that's the numbers that they produce are mingled at best. So understand that something to be aware of is that these markets here trigger the economic downturn. And I don't want to sound like a crash bro. I just want you to be aware of what's going on. Be very educated about where your investments are, and understand that anything could be the one thing that knocks down our house of cards. This just came out yesterday or today. It looks like today. This is bank rate. 47% of homeowners would need a mortgage rate under 5% to be comfortable buying a home this year. Well, homeowners, how about home buyers, first of all? And yeah, everybody would be comfortable at 5%, especially since we're at 7% right now. This is very painful right now, right? We're not going to see 2%, 3% unless we see another pandemic or something, right? Something that trigger the market. But then guess what's going to happen? The investors are going to come in, and then you're paying $400,000 over list price for a house. Now there's the other side of this coin saying loan officers pushing buyers into these loans at 7%, saying, don't worry about it. In a year and a half, the rates will come down. Well, we've been saying that for 2 years now, and rates aren't coming down. So that's putting people into a precarious situation where they might feel a little overwhelmed having to pay this huge onerous. People today, it's very difficult for us to pay about $7,000 a month for a home, unless you have a massive down payment to cover that, to drop your monthly nut down. it's going to be difficult for you to move. And that's why we have the inventory problem. That's why we have houses like this costing $2.5 million. Not my listing, 3-bedroom, 1.5 bath, 1,100 square feet. This is near Apple. That's why I brought it up. But look at this. It looks like a mobile home built in 1950. Nothing great about it. The only thing great about it is it's near Apple, right? Apple is right there. You can walk to work if you work at Apple. So that's why it's $2.5 million. It's been on market 62 days, haven't touched the pricing. Why? Because the seller thinks that their house is worth $2.5 million and they're willing to wait to find the right buyer. I think this hurts everybody. I think it hurts the market. I think it's unreasonable. Remember when we talk about attracting the market or being a market maker? This seller wants to be a market maker, and there's nothing special about this house. I mean, look at it. I think we've looked at this one before. It's just a piece of crap house. They're like, oh, the value's in the land. Well, okay, then I'll pay you $1.5 million for the land. But when you're on market 2 months, you become part of the statistic. You become part of the problem. So I think originally this was a 2-bedroom, and then they built this out right here. They built out the garage into it. Nothing special about that house. This one is semi-close to Castro Street. This is Mountain View Home of the Week. Again, not my listing. 3-bedroom, 1 bath, 1,108 square feet. Built in 1952. Nothing. It's a nice little ranch house. Been on market 16 days, so it's still fairly fresh. Okay, really quick, just show you the numbers here. July 24th, we have the days on market report is 40 days on market. We have 165 single family homes in Santa Clara County. In 90 days, we have 39, which is staying fairly nominal. If you look back the last couple months, back in March, we had 57 homes for sale. But again, it's kind of a normal thing when you go into the summer and things slow down. So I wouldn't be too worried about it. We have 78 bank-owned properties in the Bay Area, and all of California is 167. Those numbers went down from last week. So bank owns kind of ebb and flow, where they'll put a bunch of homes on sale in the beginning of the month, and towards the end of the month, they want to capture that. And it kind of goes every month. So it kind of ups and downs by the monthly cycle. San Jose, we have homes for sale. We need 1,000. But right now it's actually good because the volume of sales transactions right now are slowing down because it's the summer. And some people are waiting for the election to happen. They have this, it doesn't matter who the president is. It doesn't matter who the governor is. It depends on the economy. And it doesn't matter if you buy a house today or the day after the economy crashes, the value will come back eventually, right? It's about when you buy and when you sell. And if you can afford to compete with investors, then do that. But if you're a first-time buyer, I say buy a house now, suck it up. And if the market does crash, rates will come down, and then you can refinance. And in 10, 15 years, you'll be doubling your equity there. Santa Clara County, 1,000 homes for sale. Same thing, 180 closed homes. Again, not anything special. Probably the fourth highest that I've seen so far this year. But volume is severely down, mostly because inventory is down and because interest rates, right? So there you go. Percent loan is a great target rate for a home buyer, and there's a shift happening across the United States, not necessarily in the Bay Area, on inventory. So just keep an eye on everything. Come back to the website.